mitigate the regional risk and capitalize on various new opportunities while ensuring stability and resilience. As an example, while some pockets were impacted in FY24, we gained in others, such as growth coming out of emerging markets for auto and non-auto, trends of premiumization playing out in developed markets. For more details on this, you can refer to slide 11 and 12. I would like to highlight that the full impact of closed acquisitions that have come in will impact this customer and component mix will further get diversified as these get fully embedded in our results. The company is well positioned to benefit from tailwinds in emerging markets. This year alone, we are adding 6 new greenfields across India, China, and Poland. More information on this is on slide 16. This is over and above the 12 that we have already announced earlier. We will be investing 2,000 crores on these greenfields in FY25. 70% of this capex will be towards non-automotive greenfields. Overall, we are likely to invest in capex about 5,000 crores plus or minus 10% in FY25. On the inorganic front, SAMIL has closed all announced acquisitions. I would like to highlight that FY24 numbers only factors 6 months of Dr. Schneider and 8 months of SAS. Impact of other key acquisitions such as Yachiyo, AD Industries, and Lumen would only be visible from FY25 Q1 onwards. If acquisitions closed during the year are annualized along with Yachiyo, AD Industries, and Lumen, the reported revenues would be approximately 1,13,000 crores versus the current reported revenue of approximately 98,700 crores for FY24. Another important milestone will be crossed for us with the sales crossing the 1 lakh mark. While we are investing for future growth, we are also very much disciplined in our approach. The leverage ratio, as guided to all of you by Kunal, has improved to 1.4x from 1.7x with a reduction in gross debt of about 1,800 crores compared to December 2023. It is important to note that we are back at FY23 levels on leverage despite the large M&A payouts and growth capex done for the future in the current fiscal. We are quite comfortable with our liquidity position with undrawn committed lines and cash of approximately 15,000 crores as of 31st of March 24. This gives us significant firepower to pursue more growth opportunities while maintaining financial prudence. The company's disciplined approach has resulted in positive rating actions, with Moody's Ba1 rating under review for upgrade and Fitch upgrading senior secured bonds to BBB- investment grade. It is a testament to our commitment towards ensuring sustainable growth and delivering long-term value for all our stakeholders. We are extremely grateful to our customers. Their trust is reflected in the automotive book business of close to almost $84 billion, which is up from $77 billion reported in September 2023. Please note that this automotive book business does not include Yachiyo as yet. Non-automotive book business will further add to this number. The full year results demonstrate SAMIL as a robust platform for growth, underscored by clearly laid out plans, that is, a 5-year strategic plan that guide our direction. As we are in the 4th year for our Vision 2025, I would like to provide an update on the various metrics. 1. The pro forma gross revenue is estimated at approximately 1,72,000 crores or 24 billion on constant currency basis. Please refer to slide 27. 2. The company remains focused on ROCE and absolute profitability, and I'm happy to report that the ROCE has improved to 17% in FY24 compared to 11% in FY23. Please refer to slide 18. And finally, the non-automotive business incubated as a part of Vision 2025 strategy has started to shape up with the potential to grow exponentially from here with changing tides and alternative supply chains being set up. Among a few lesser known facts, post the acquisition of AD Industries, our aerospace division is now one of the key suppliers of structure and engine components to Airbus and Boeing. The health and medical facility is also well on track to receive certifications and will start supplying to the new set of customers from the current financial year. Given our manufacturing DNA and operational expertise. New customers have approached us to provide solutions in new segments, as a result of which we are further investing and diversifying into consumer electronics. I would like to congratulate the team on delivering stellar results as we push on to reach our Vision 2025 targets. The team and I are happy to answer all your questions. Thank you very much for your patient listening. Operator, could you please assemble the questions?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you wish to register for a question, please press star and 1. Our first question is from the line of Kapil Singh from Nomura. Please go ahead.
Good evening, sir. Congratulations on a very strong quarter. Firstly, just some clarification on, there is some one-time items here that are mentioned for Q4 EBITDA. If you could just help us understand, there is a 197 crores contributed by customers towards Forex and also 69 crores of Forex gain. So just want to understand these are accounted for in which line item and which business division do they represent, and this is for which period, and also if you can give some color, is there is this for the full year FY24 or there can be more such claims which we may realize going ahead?
Kunal, can you take this?
Yes. Hi, Kapil. So, Kapil, the 197 crores is in reference to compensation that we have received for the losses that we suffered in Argentina. If you remember last time or last quarter, we had highlighted some of the challenges we have in Argentina, given how the forex devaluation happened in that part of the world, which we had said that we will be working with the customers to share. This is part of the compensation that we have received. This has been embedded as revenues because it's come as a compensation, not netted off against cost. The cost of this is still residing in finance cost, given that's how the hyperinflation accounting works. But at the EBITDA level, this has come as compensation for what you're seeing in the finance cost. Hence, we have classified that as one-off from an EBITDA perspective. You're not seeing that same thing play out at PAT level because there it gets netted off against the forex losses that we have in the finance cost. Hope that answers.
Can I just ask, for the this is for the Q4 FY24, is this reflecting in the profit after tax? I believe you're referring to full year.
Yeah, I'm referring to full year, absolutely right. If you're referring to the Q4 data, in the Q4 data, there are other elements also in there, which includes 69 crores of forex gains as well that is sitting in there. So that's the 266 crore number that exists. So besides this 197, there is a forex gain, which is again netted off against the forex losses, given the hyperinflation accounting is residing in the interest costs.
And this 197 crores in Q4 is and 69 crores, both of these are in revenue, or where are they accounted for?
So your 197 crores is accounted for in revenue. 69 crores would be in other expenses or netted off against other expenses.
Okay. And this is for which business? Okay, you mentioned that it is for covering up the losses. Understood. And which period does this cover up for? This is mostly in FY24?
That's right.
Okay. Are we having more claims, or FY24 claims are settled with this?
This one we are not having more claims on. Obviously, the hyperinflation scenario in Argentina continues to evolve. Same is true for Turkey as well. And as it plays out, we will work with the customers to see how we are able to get their support.
Sure. Thanks. And could you also talk about there is a 231 crore deferred tax asset. Could you just talk us through that, what has caused that, and what could be the effective tax rate for next year considering this?
Look, the deferred tax assets, as the performance of different parts of the group has improved, as well as some of the international reorganization that you're aware that we have done, has resulted in our ability to claim some of the past tax losses. And hence, we've put 231 odd crores as deferred tax in this quarter, incrementally over normalized levels, if I were to put it. On a more normalized level, I would think, the ETR would be somewhere in the 25, 26, 27% level, somewhere in that level.
Okay. And sir, just lastly, wanted to check, we are putting in a lot of capex for next year with these greenfields. Any indication on the potential revenue that these facilities can generate at full utilization? And also, if you could give some color on the consumer electronics capex, what is the capex there, and how much is the capacity put up, or what is the end product?
So, Kapil, the capex, we don't give revenue guidance, as you know, so it will be incorrect for our side to talk about these greenfields in particular. You can do potential assessment with some asset turnover, etc., if you want to do some sense of it. But we will be spending around about 2,000 odd crores across these 18 odd greenfields, which will be coming up in different points in time. Typically, the greenfields typically take anywhere between, let's say, 6 to 18 months for the ramp-ups to happen, depending upon what product line it is in.
Yeah, look, I think like Kunal said, we are bound by confidentiality clauses to disclose too much around the sales and the capex of the individual things. But as you can see, the growth is quite visible in all the new businesses segment that we are reporting as a individual segment. Take some cues from that. We expect it to grow rapidly from here on an exponential basis as these plants come into commission and these things get paid out. But we'll only be able to give you more information about that later in time as these things become that much more significant. But we are definitely putting the platform for these businesses to grow significantly.
Sure. Sir, I was not looking for a revenue guidance, but just, maybe some more color, particularly on the consumer electronics side, because it's a new division. Anything you can share in terms of product at least?
We had already shared in one of our last results the joint venture that we have formed and how we are building on that. You could look at that for cues, but as of right now, we're not allowed to disclose anything more on it.
Sure, sir. Sure. Thanks. I'll come back in the queue. Thank you so much.
Thank you. A reminder to all the participants, if you wish to join the question queue, please press star and 1. Our next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi. Congrats on a great set of results. A couple of clarification from my side. One is this slide 27, which you are referring to. We have two items, 14,500 crore and 14,000 crore. So that is the impact of if we consolidate all the acquisitions for the full year. Is that's what it is?
Yes. So, because we are, always measuring ourselves as compared to what we set out for our plan in 2020 for Vision 2025. So, if we allow everything to move, like, for example, forex rates, etc., we kind of fix them at that point in 2020 so that we can really have an apples-to-apple comparison on how we have done on delivery of our 5-year plan. So if you look at of course, the FX rates that we had set at that time, and we set the vision because, of course, there are multiple geographies, multiple different forex plays out. It's out of our control whether something moves up or down. Plus, you take what is the 12-year run rate of these acquisitions that we have done with that conversion rate of the FX, we are somewhere around that 24 billion mark. Of course, with the way the current forex is, the forex rates are, the number on an accurate basis is slightly lower. But again, we are only measuring ourselves as we committed for our 2025 plan at that time at 2020. So taking all of that, and this has been consistent how we've done it for all our 5-year plans. We're wanting to show you that in the up to the 4th year, we're already at that 24 out of 36. We still have a bit of runway to go, but like I said, we are maintaining all financial prudence to make sure that we deliver the strongest result and preparing the company for long-term growth.
Got it. And would it be possible to talk about what would have been EBITDA for the full year if we consolidate all the acquisitions for the full year as against 9,300 crores?
It will be a little bit difficult to do that because, of course, some of these acquisitions that we have acquired have been, distressed. And of course, with us coming in and doing a lot of the reorganization changes, it will not be reflective of what is really the current situation. I think some of the bigger ones that you are seeing, for example, SAS, all of that is already played out. But you're going to have to give us a couple of quarters to see how the new ones are panning out. But of course, our endeavor is to do much better than what we have where we got these assets, and that has been the track record and history of Motherson to be able to deliver on that. So we are hoping that you will see that in the next quarter itself.
Got it. And second clarification was regarding this one-off forex gains. So the entire 266 crores is residing in fourth quarter. 197 is in revenue, 69 is in netted off in other expenses. Is that correct?
That's right.
Got it. And lastly, from the capex perspective, for the full year, we are expecting to spend 5,000 crore, including 2,000 crore on greenfield. So, would you be able to share, apart from this 1,400 crore in the new businesses, 70% of 2,000 crore, broader areas where we are investing, which businesses are we investing in?
I thought the information is already there on slide 16.
Okay, I'll take a look at it. Thanks.
Okay.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask questions, you may press star and 1. For any further questions, you may press star and 1 on your touchtone phone. Our next question is from the line of Abhishek Jain from AlfAccurate Advisors Private Limited. Please go ahead.
Thanks for the opportunity and congrats for a strong set of numbers. Sir, in a region system, growth Y-on-Y is 16%, but EBITDA margin remains flat at 10.3%. So what is the outlook ahead on the margin side and the top line growth?
So, Abhishek, as you know, SMR is a very diversified business, working with most of the OEMs globally in all the geographies. So, if we see the growth this year as well, when you compare with the vehicle volume growth, has been pretty good. So the volume growth has been about 8%, and what we have delivered is about 16%. Of course, the growth is not the same in all the markets. China has seen a very different growth curve, and we are not so much present with the Chinese OEMs, and that's on purpose. So what you see is a reflection of an overall improvement that we've seen year on year. Also, a point that needs to be considered is last year in the Q4, when you see there was a one-off which we had a write back of litigation that we were having, which was about 10 million. So if you do a like-to-like comparison, then it shows a 9.7% EBITDA last year compared to a 10.3% this year. So that would actually show that the growth in profitability is higher than what you see actually in the reported results.
So sir, in last year, in FY24, there was also impact because of the labor strikes in the US. So most probably this will not impact in this year. So most probably the margin will improve further from 10.3 to 10.8 or 11%.
So as I said, yeah, this year, of course, had its own sets of challenges. So there was Red Sea crisis. As you rightly said, there was also the strike, effect in America. And while there was a catch-up in the later months, it did have an overhang. So clearly, as we go forward, we will overcome all these, challenges. If you see the ROS performance, I think the ROS performance has been very good, and that is where we focus. And going forward, we are coming very close to the group objective of ROS performance. So yes, you would see better performance on ROS going forward.
Okay. And so in wiring harness business, there's a very strong growth of 19% YoY in FY24. And further, there's an increase of the copper prices in this year. So what will be the impact on the increase in the copper prices, the top line and the EBITDA side? Positive or negative?
So definitely with copper prices rising, it will also revenue will grow up, and copper is all passed through, so with a lag, but that's how it is, and all the copper increases get passed, so whether when it goes up or comes down.
So is there any benefit of the increase in the copper prices in Q4 in the wiring harness business?
Not significant, because when it's rising, copper prices rise, and there will always be a slight negative impact, because the pass-through is at a rate. When copper prices decline, then there can be a benefit for a certain period of time.
So most probably the next quarter number will be better than this quarter, because ultimately you will be able to pass it the cost to the clients. Right, sir?
There are lots of factors. As you know that our businesses are multiple geography, multiple customers, and there are a lot of factors which impact the businesses. And as I said, when you look at only the impact of copper at a certain point of time, depending on how the average copper price been during the quarter and at what price the price has been adjusted before the quarter with a particular customer, because there are different pricing norms with the customers starting from which month to which month. So it's amalgamation of all of it together. That's how the results will get reflected on. So I can't predict exactly how will the overall quarter look like, but always as a team, the endeavor and Motherson has been to continuously keep improving things which are within our control and improve our operational performance and improve return on capital employed. That's what we focus on, because our products are also getting more and more enriched, and so just looking at margins is not the best thing for us, and hence the company always focused on ROCE.
Thanks. And my last question on the recent acquisitions of Yachiyo and others. So what would be the incremental revenue you would be able to get in the first quarter because of these integrations?
So again, if you look at slide 27, you can get a little bit more idea of that. There's a column which talks about the pro forma impact of closed M&As on net revenue, which is estimated. It's about 14,500 crores.
14,500 crores on an annual basis.
That's correct.
Thank you, sir. Thank you, sir.
Thank you. Participants, you may press star and 1 to ask a question. Our next question is from the line of Gunjan from Bank of America. Please go ahead.
Yeah, hi. Thanks for taking my question. I just had a quick follow-up on the 197 crore and 69 crore one-off that we have in quarter four. Is there a way that you can call out which segment is this coming through in? Because the reason I ask is in most sub-segments, the margin seems pretty much, what you do in Q4, or it's been within the range, but in modules, the margin has seen pretty significant expansion. So is that's where it is getting reflected? Is that a fair reading?
No, it is getting in integrated assemblies. It's disclosed in integrated assemblies also, I think on slide. On slide 22.
Okay, and okay, got it. Yeah, it's okay, and then anything in particular to call out in the modules and polymer business, on the margin expansion, or is there something we need to read from a change in mix, and this is where the margins are sustainable now, because it's typically been in the 7-8% range, and this quarter has been quite meaningful improvement.
Yeah, thanks for noticing that. Look, we've been making a concentrated effort to improve margins, but of course, the delivery of the company is on rows as a whole, and margins play a part of it. So we have definitely been taking a lot of actions to improve it. Also, we have been speaking about a lot of the sharing of the costs, which we got some support from the customers as well. We have to thank them because they have had the confidence in us and continue to award us on programs and share some of the costs which are out of our control, which has again been played out. But definitely we would like to maintain these and grow from here as we move forward. It was on the lower side in the past, but a lot of efforts are being made to improve this aspect of that division and to catch up with the rest of the group. So it is a concentrated effort, and hopefully we maintain and grow from here.
Okay, got it. And just following up on that, in the past you all have spoken about these renegotiations and a lot of cost increases which have happened in last 2 years. There were constant conversations with customers. So is that an exercise which is to a large extent behind now, and it is more to do with what happens to commodities incrementally, and we pass through that? So that one-time exercise is behind for now.
Ma'am, I wish it was a one-time exercise, but there are new challenges that come up every quarter. There was a challenge of energy prices spiking, in a couple of quarters. That has stabilized now. There are some, like now copper will be although it's an automatic pass-through, but similar commodities, when they spike up, those kind of conversations happen with the customers. So, it is a constant thing that we keep talking to our customers. Obviously, also when there are programs that are done phenomenally well, the reverse conversations also happen. So we want to focus on making sure that we can, deliver the product in the most efficient manner, and whatever is this extra noise which is not in our control, that's something that we sit together with the customer and make it on a fair, equitable basis so that, we support each other and continue to grow. But definitely, there's been a lot of work that has been done to make the operations more efficient. And as the macroeconomic indicators start to stabilize, that's when you start to see much better performance, and there's no spikes that are moving up and down. And I think that's the kind of level that we have reached with the macroeconomic environment as well. So like I said, I hope that this continues and things are stable. As they are stable, we can continue to show improved performance as we put in our efforts. But if there are volatile things that happen or certain changes that come in the environment, we have to deal with it as it comes, and then of course sit with the customer at the end of the quarter, end of the year, and try to get a fair outcome out of it.
Okay, got it. And last question on the M&A, clearly you've been talking about more opportunities coming to the market, and now from a balance sheet perspective also, there is flexibility. Now, if you were to sort of just give us a little bit of sense on, what sort of, inorganic acquisitions are that we'll be keen to pursue, it is in terms of segments, in terms of, is there a new, so you did talk about consumer durable, but bulk of the acquisitions come through in other segment now. Any color, how should we think about that?
I think we've guided you in 2020-21 with the 5-year plan. Was it 1920? Sorry, 1920. And we had set the target for 36 billion. That's the kind of range that we are talking about. We have enough to qualify the difference between 36 and today's target, whichever you take it. So please be sure that we will not let our egos take over. It has to be customer directed. Customer is very important for us, and we have the trust of the customer. So depending upon the volatility and the other factors which are there in the world today, it is a VUCA world. But I think there's going to be enough opportunities for us to make sure that we cross our target, and as well be of huge, immense help to the people in those particular acquisitions, and of course the customers. So we don't really get carried away by a particular size or quality of the asset. We believe that together with the customer, we have to work to make sure that this particular thing is achieved. And if the customer is happy, then definitely all our divisions, all our companies actually benefit, because there's less stoppage of production and things like that. So it's a huge philosophy that we followed. There's a 5-year plan, and it's very difficult to guide, because I can't tell you what is happening. So all I can say is, wherever the thing will be, it will be related to the customer, and the ability of Motherson is, we are not gods or anything like that. We work together to solve the problem for the three of us. That's the customer, the company, and Motherson. So I hope that would answer it. Further than that, I can't give you any color or any or names or anything like that, or the division where it will happen. But a lot of opportunities. Customers calling us all the time, telling us what we have to do. So we will keep evaluating that, and the results will come to you.
Sure. All the best. Thank you so much.
You're welcome.
Thank you. The next question is from the line of M. Pirani from JP Morgan. Please go ahead.
Yes, hi. Thanks for the opportunity. Two questions from my side. First of all, if I look at the list of your greenfields, you are doing a few of them in China also. And historically, as well as today also, you mentioned that you are not present in a big way with the local OEMs. Given that most of these greenfields are still happening within the automotive segment, can you give some color as to, are we continuing to be with the global OEMs in China, or is there some plan to increase engagement with the local OEMs who are gaining share?
These two that you're seeing in China for integrated assemblies are for global OEMs. This is more specific programs that we have won that we will deliver. And the other one is the wiring harness one, where we work with our joint venture partner, and we support, as you know, on the commercial vehicle side, it's mostly Chinese truck makers and their joint ventures with global truck makers. So we do supply to all the joint ventures which are with the global truck makers like Daimler and also Scania. So all those things we are doing. So for that purpose, it's there. And also, I think it's important for you to understand that, we are not putting up capacities for, Chinese customers or something like that. I think we have taken a view as a group that we will, in a calculated manner where we know that the customer is growing well and we have a good probability of success, We are also catering to the local market. Of course, it's a small portion of our sales, but as the market will change and evolve, we will also change and evolve. When we entered that market, the international OEMs dominated. Now you're seeing that some of these Chinese OEMs are setting up shop, for example, outside as well. Why would we not offer our services where we know that, we can give them a good solution and we can maintain our profitability and recover our investments? We will definitely look at those opportunities and treat them on a fair and equitable basis. It was just historically when we acquired these companies, they focused on it, but we are, adapting to the market as the market needs.
And I think to add to what Vaman has said, I personally feel, in my view, that the Chinese manufacturers, OEM suppliers, ancillaries and all that, will have a real tough time when they go out of China. And that's where Motherson facilities will get a better opportunity to be more competitive because the playing rules will be in our favor. We're already there. We already know the challenges and etc. I think the Chinese ancillary suppliers will have a tougher time. That's what I feel. Though they are very good, they might subsidize, they might do whatever. But I think out of China, it's a level playing field and we will be in an advantageous position. That's just my view.
Understood. No, that's good to know because they are expanding in Europe where you obviously already have a very strong presence. So that's a very interesting point. Secondly, just a clarification, this 5,000 crores NCD that you're planning to raise, is it mostly some debt refinancing or are we looking at, keeping some cash for some extra capex going forward or some M&A?
Look, it's an in-principle approval. As you know, the regulation requires us to take an in-principle approval and put it. Last time we had taken 3,000 crores, we had issued 1,500 crores. We've taken 5,000 crores. Depending upon the need of the business, we will come back and announce what is the size. So please treat this as an in-principle approval for 5,000 crores.
Sure. Okay. Thanks for that. I'll come back a bit.
Thank you. The next follow-up question is from the line of Kapil Singh from Nomura. Please go ahead.
Yeah, thanks, sir. Just one follow-up. Is it possible to comment on Yachiyo's performance for last 1 year? Or, if it's possible to share numbers, it's great, but if not, at least qualitative comments on revenue and margin performance would be helpful.
Look, I think we would like to focus on what we have inherited, and you will again see what we do with that in the results. I mean, you can look up whatever is there, public record that is there available in the public domain, as they were a public company before we acquired it. So you can have a look at that. But of course, there are some bits which have been kept by Honda-san, such as Gochi, which is a part of the products that they offered. So you really won't get a like-to-like information from there. I would suggest please wait for a quarter. You will see the first quarter result of Yachiyo, and then we can answer a lot more questions as we have full grip over the entire business and the accounts.
Sure. So thank you and wish you all the best.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask questions, please press star and 1. Participants, you may press star and 1 to ask a question. Our next question is from the line of Suhrit Deora from Paladin Capital. Please go ahead.
Hi, good afternoon. My apologies, I joined the call a little late. I have two questions. One is that from your vantage point currently, how do you see the business environment and the M&A environment?
Look, from the business side, I think our strategy of 3CX10, no customer, no country, no component, to be more than 10% of our business has really helped us through these volatile times. Different geographies go through different periods. We can get into it region-wise, but of course, great bright spot is India. Record number of cars produced. And we hope that this will continue going in the year. The European outlook. A lot of challenges has been there. So we are looking at consolidating more over there. We've done a ton of acquisitions, and as you can see, the trucks are also going up and down depending on the geography that you are there. So again, I think what we do at Motherson is that we try to focus on where the bright spots are and continue to grow those operations and breathe with the market where there are challenges and make sure that we are the last people standing over there, so that when the business comes back, we can grow. And that's the kind of thing that we have been doing. With the acquisitions, we have further obviously cemented our closeness to the car makers, to a lot of our customers, and penetrate more and more, increase the content, have their trust, and are being asked exclusively to go after these acquisitions. A record number of acquisitions for us as we are busy integrating them into the Motherson DNA. So the challenges still remain. We were just discussing, I don't know if you were on the call or not, that on a like-to-like basis from where we set the plan for Vision 2025, we are going at 24 billion. We still have 12 billion to go. So those are opportunities that we still are on the lookout for. But again, no gun to our head or something like that we have to be done at any cost. We will, as you have seen in this quarter's performance, maintain our leverage ratios, maintain our profitability, maintain all the growth targets, and continue to invest in Motherson for the long term, whatever that number will be at the end of this year. But definitely, we see hope. There is a lot of troubled issues that are still out there in the world that the customers may need us to solve, and we will be opportunistic about it. So teams are not don't have any time to really be not focused. I think a lot of stuff is still on our plate that we continue to solve as we move forward, and hopefully end the year and the 5-year plan very strong.
Thank you.
Sorry, we can't hear you.
So your audio was not clear.
No, that answers my question. Thank you.
Oh, thank you. Participants, you may press star and 1 to ask a question. As there are no further questions from the participants, I would now like to hand the conference over to Mr. V.C. Sehgal for closing comments.
Thank you very much for all the questions. I hope my team could answer them to your satisfaction. We are still a very OEM-focused company, and we have a lot of issues on what we can say, what we cannot say. But to the best of our ability, we try to explain things to you. But it's interesting to see that, if you look at this last year, we have been telling you all that there are a lot of acquisitions happening. In fact, we've closed to 18 acquisitions. A company which gets that kind of opportunity definitely has the trust of the customer. And even now, we are inundated by requests, not just from the OEMs, but even from the customer, from the component makers themselves, which are asking us, can we be a part of SAMIL, the way we professionally manage all the acquisitions and all that. People have done 2 or 3 acquisitions and closed on 2 or 3 acquisitions as well. Motherson has a good record. We have not closed any acquisition. We have not shifted. We have taken all the challenges head on. So I think the next year is going to be, this current year is going to be a very fulfilling one, because we have the trust of the customer, and please don't have doubts that we will not cross our targets. With that, wish you all a very happy evening and business in the coming time. Thank you very much. Grateful.
Thank you. On behalf of Samvardhana Motherson International Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.